So hello traders, today May 5th and I would like to give you an update on oil. Yesterday we have 3 times as much supply on oil as it was extremely bearish news. And if you watched prior video, I said I don't care what supply is, I don't care what news is, oil is heading to 46. Here we are, next day oil at 46. Confirming once again, fundamentals hold no value whatsoever. You saw it happening on Netflix when Netflix crashed and burned despite phenomenal fundamentals, and you're witnessing it on oil. 3 times as much supply, extremely bearish news, and oil rallied up to 46 as expected. Next level is this one, but one step at a time. Knowledgeable trader monitors for rules to be met and understands how crucial this level is. And that's where oil is once again, confirming fundamentals do not mean a thing. We only respect news and earnings due to volatility. And we remember always and forever. When price comes to reversal zone, you exit this trade. Poor FIT. I project FIT will reach 10 next. This was FIT at the time of earnings. But all the levels spelled out by the price and Fibonacci many months before the earnings. When price said, when reversal zone will be reached, get the heck out of the trade. It's that pure and that simple. This exact same formula applied to Netflix, which continue crushing and burning as expected. I posted this on January 27th, that Netflix is finished, that it's heading to 85 and then 60. Mid-April, phenomenal earnings, but Netflix continue crushing for exact same reason as you're seeing time and time again. When price comes to reversal zone, you exit the trade. It doesn't matter if it's Netflix, it doesn't matter if it's S&P. You respect the rules and you remember always and forever. Never ever acquire position into reversal zone. S&P stuck in massive bearish correction on weekly, struggling immensely. But as long as S&P respecting decision point 2 to the downside, it is only a correction. Collapse that played out in January, very powerful reminder. Never enter into reversal zone, never short into reversal zone, where bullish rally came from. And that's the accuracy and power of Fibonacci that will override any indicator on any instrument and any time frame. Here are bonds, shock or not. Reversal zone is reached, bonds reversed. But where is the bond struggling at? Exact same place where S&P is currently. End of minor trend. Reminding you, know where crucial support is, know what not to short into. Reminding you what's happening on bonds is exact same thing that's happening on absolutely favorite and most incredible chart ever. 21-minute chart. Monthly bonds, identical structure as 21-minute, where we've taken long from. No Fibonacci levels. It's that simple. And play by the rules. Price comes to reversal zone and you know the rules, you take short. Rules are not met, you stay out. This is bullish fluff. This is junk. Exact same junk we're witnessing this morning on S&P. Euro reached reversal zone on daily at 14.45 and started selling pressure. But let's take one step at a time. This was Euro at decision point 2, 4 days, ultimate resistance, This was sell-off first time price came to reversal zone. More than a week. Once again, euro came to reversal zone. Here comes the selling pressure. If you are acquiring long position, you're acquiring long position from as low as possible. You never acquire long position at reversal zone. If you do, your success rate less than 20%. Exact same formula applies to any instrument you look at. And that's the accuracy of Fibonacci and alpha wave trader method. Will the price do exact same thing as it's done on FIT? Will it do exact same thing as it had done on Apple? Reversing from reversal zone? Completely from 130? All the articles about Apple. As I'm interested at Apple at 60. The biggest loss of wealth in America due to Apple collapse. And Apple collapse just begun. This is post from January 25th, that this is the end of the minor trend where I expect bounce on Apple until 111, which will be the end of the minor bullish trend where Apple collapsed from, back down again. And this is what I'm expecting Apple to do. This time around, I expect Apple to break through this level and crash and burn down to 80. 80 is broken, Apple heading to 60. So if you're an knowledgeable trader, you've been shorting Apple, not buying Apple, as Apple reached reversal zone. And here is S&P, doing exact same thing on a little baby chart, as bounce as Apple, and as famous Valiant had done, which is a chart that's becoming my absolutely favorite. We should see Valiant today after the Senate hearing yesterday. Valiant spelled out years in advance that it will crash and burn when 260 will be reached. Collapse on Valiant started many months before SEC investigation. Bad earnings did not play out until Valiant was about 80. And that's the power of fundamentals. At 260, Valiant earnings were stellar. And Valiant was crashing and burning. And this is Netflix since January 27. Reminder. Fundamentals do not mean a thing. Stellar earnings and Netflix crashing still. Oil Monthly reminding you. You know Fibonacci levels? You have been long oil. Oil rally had just begun. Expect to see oil at 51. If you're an investor, buy oil from 30, 38, 40 levels. Oil heading to 51. Is this a wise place to enter oil? Absolutely not. Oil can go through massive pullbacks for the next month or so. This is not the place knowledgeable trader enters oil. Way too late. And here's bullish rally on gold in a progress as expected since November 2015. As posted on social media forever, expect to see gold at 1300. And here's gold. No surprise here. As updated on February 2nd, gold heading to 1200. Once 1200 is broken, 1300 will follow. All of this happened once again because Fibonacci Reversal Zone had been reached. That pure and that simple. You know the rules, you know where to take a trade. Now not the time to enter long on gold, not the time to enter long on oil. Way too late. So you're witnessing the entire morning how much pain S&P is in. Both trends are minor, buyers and sellers stuck. No surprise here, as I warned you. Euro right now doing exact same thing as Apple. I expect Euro to break through this level. I expect Euro to crash into oblivion. And let me remind you my post from 2013. Short, 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 short euro from 3800. Short from 3800 on euro. Stuck at the end of the minor trend. Doing exact same thing as baby S&P. No surprise here. Does not matter what you trade. Formula remains the same. On this exact same trade on S&P short-term chart, you're witnessing the importance of crucial decision point 2 as essential resistance level. This is exact same level on the S&P yearly chart. Crucial Fibonacci support. This is exact same level on S&P monthly chart. Crucial Fibonacci support 1800 and very powerful resistance. Reversal zone at 2100. As posted for many years. When S&P will come to 2100, get the heck out of the markets. Market remains in massive bearish correction year and a half later. And this is what Fibonacci levels all about. It will impact not just your day trading decisions, it will impact your investment decisions forever. You will never trade on indicators, you will never invest on fundamentals. It will never work. The only thing that does work is price and Fibonacci. And if you just learn the rules, you will never need financial advisor or anyone else to make your trading and investment decisions again. As all levels preset by price and Fibonacci only. Fundamentals and indicators, just a background noise.